Hello folks, you're welcome back. This is my first commentary for the month of March 2025, and we're starting our top-down analysis with the dollar index because the dollar index is the main driver for all the dollar and dollar associated currency. Again, for purpose of the beginner trader who is looking at this for the first time, I would like to help you understand the relationship between the dollar and the foreign currency, which is inversely correlated. If the dollar is bullish, it means foreign currencies are going to go bearish. It means if the dollar is also bearish, it simply means that foreign currencies are going to start buying. I mean, currencies like the Euro USD, the GBP USD, the NZD USD, AUD USD, they are inversely correlated with the dollar. They have an opposite relationship. All right, but it's important you do everything with the dollar first. Since the dollar is the main driver, we'd like to know the dollar is ready to start buying or selling. Then we implement the opposite on the opposing asset. Okay, so you can see clearly here that the dollar has been creating a bullish price range. We see the dollar created an expansion higher, repriced into the discount fair value, the buy side imbalance, sell side inefficiency right here, and also the bullish mitigation block. Price mitigated all of that, and we see price create another expansion higher, creating the bullish breaker right here. After taking out the low here, price created a shift of market structure bullish. This is technically the bullish breaker. And when you're dealing with institutional reference point in their order of importance, you like to pay attention to the mitigation block first. In the absence of the mitigation block, you like to pay attention to the breaker, then the liquidity void, then the fair value, then other blocks, then rejection blocks, and the old highs and the old lows. I think in my subsequent videos this week, I'm going to take out time to teach about how to prioritize institutional reference point in their order of importance, and how to look at which one at every time and which one is going to hold price action and push it higher. I'm going to be doing that in my subsequent videos during the week. Okay, so today we're looking at the dollar sitting and reacting off the bullish breaker right here. All right, so if we see a confirmatory signature on the daily time frame, especially if there's a shift of market structure bullish after price has reacted off the bullish breaker, it's going to confirm we're going to continue bullish. And where's the next drawn liquidity? Because that is more important in determining order flow. Knowing the directional bias, knowing where price action is most probably going to trade into is very important. Okay, so we are looking at price action trading into the next drawn liquidity, which is the buy side liquidity pool residing above that old high, and as well the buy side liquidity pool residing above the old high right there. Remember, a simple hack for identifying drawn liquidity, so to identify highs and the fair value gap right above the high, that will be the drawn liquidity. So we have a fair value gap right there. Okay, so this tells me that we're going to draw into that draw on liquidity. Then we refine down to the weekly time frame, and on the weekly time frame, we're simply looking at price action creating larger expansions in the direction of order flow with smaller retracement in against the order flow. So since we're bullish, we like to see larger expansion legs to the upside and smaller retracements to the downside, which of course we've been seeing previously. Price creating expansion higher, smaller retracement, expansion higher, retracement into another block mean threshold. What does it mean? This simply means we see the dollar traded into 50% of this large bullish order block. You see the body of the candle is sitting on 50% of that bullish order block. You pick up your Fibonacci, measure the range of that bullish order block, and that will mean the order block mean threshold. This is what it means. You see, 0.5 simply means 50%. We draw it out. Okay, so that is 50% of the bullish order block right there. This is because this is a large range bullish order block. The candle of the order block is quite huge and was traded through by consecutive buy candles. We like to measure 50% of that candle as the order block mean threshold. Price action traded into that level, and you can see it's showing reaction at that level. These are institutional levels. So on the monthly we have bullish breaker, on the weekly we have bullish order block. Then on the daily time frame, we look at market structure. Okay, so on the daily time frame, I see something very unique, very powerful for me, because look at what we're seeing on the daily time frame. On the daily time frame, we see price action took our liquidity below that old low right there, right here, and created a shift of market structure bullish, more like the bullish breaker right there. But not just the bullish breaker, there's the confluence of the breaker with a fair value gap, and also the bullish order block right here with the fair value gap. Okay, so we're going to be outlining that fair value that we saw price traded into. You see that the fair value gap right here by the left, this fair value gap with the bullish order block right here, all of this bullish order block. If we measure the bullish order block right then, you can see with the fair value gap right within the bullish order block, it's confluence, more than one reason to support your trade idea. And what do you see? We see price action created a shift of market structure bullish after trading into, after price action traded into the bullish order block with the fair value gap. It created another shift of market structure bullish with a fair value gap, the large range fair value there. 50% of the fair value is consequent encroachment. I would like to see price action trade back into the bullish mitigation block. Why is it mitigation block? Because it's failure swing here, price action failing to take up previous low and creating the expansion bullish. We would like to see price mitigate into the internal range bullish order block right here, or the fair value, especially 50% of the fair value, but most preferably the bullish order block. Then we start to buy the dollar from the 1 hour time frame into the drawn liquidity above the low resistance liquidity run right here, the high here, the high here, the high here, that consecutive high that looks like trend line. We want to see price action trade into that level, but after repricing into the internal range. So in the new week, let's see the dollar open, reprice lower to form the low of the week and expand into the next drawn liquidity. On the 1 hour time frame, let's see what this looks like. So this is the 1 hour time frame, and we want to see price action open during the new week. We want to see it sell off into the internal range bullish mitigation block on the daily time frame. On the 1 hour, you can see it's an area of resistance turn support. It's going to give us support for price action to continue higher into the drawn liquidity. So until we see this, the dollar is not yet ready to buy. And as the week unfolds and we begin to see deeper explanations in price action, I'm going to keep you guys posted. Just make sure you are subscribed to this channel and you turn on your notification bell so you stay updated for every video that I get to post during the week. And if you are not yet in my Telegram community for free signals, make sure you check the link on the description of the video. Join the Telegram community for free signals, free trade setups, and also more details about my mentorship program. If you're looking to join me on one-on-one mentorship program, do not hesitate to send me a DM right on the description of the video. My personal assistant is going to put you through my one-on-one mentorship registrations and enrollments, and you're going to be very good. During the week, we had quite amazing testimonials from students, especially students who joined me on one-on-one mentorship. I'm going to show you some of their testimonials very briefly. I consider them very powerful. One of the most amazing things we like to see every time is we love to see testimonials of students who are doing very well. So during the week, we had a testimonial from a student who sent me his performance after he joined me on one-on-one mentorship. You can see that's a testimonial from a student. Good morning, sir. Happy new month. Want to thank you for the insight on one-on-one mentorship. Your spirit, honestly, I think this guy is just exaggerating. This student is from UK. The model is powerful, and I made 2 withdrawals last week, almost about $1,000 withdrawal. This is the withdrawal he made, $350, $500. And this guy has already recovered the money he paid for the mentorship, program. So this is one of the things you stand to get when you join us in the mentorship community. You get to benefit from this and many more. My friends, until next time, I wish you good luck, good trading, stay safe.